Do you see this as a bit of a breather and some consolidation, or do you think it could be the start of a bigger pullback on the markets?
We were due for consolidation, but there is some news coming out this week that might just affect the market. The FOMC meeting, for instance, basically they're going to be discussing how they're going to exit this current bout of expansionary monetary policy. The market's looking to that. That's where the dollar ran up. And the dollar goes up, you find commodity prices falling and commodity prices falling, and our market obviously follows that down.
Okay, so lots of economic data also out in South Africa this week. Do you think any of that's potentially market moving? We have the interest rate decision tomorrow. We have inflation figures tomorrow. How's that going to affect the markets, do you think?
Of course, the interest rate figure is obviously going to affect the market. It's going to affect our local retailers. It's going to affect the financial sectors as well. It won't affect the commodity prices too much, I think, because obviously in rand terms, because I don't think the rand moves too much right now with the interest rate. Some even speculate that a lower interest rate might even boost the rand because it might boost growth prospects for the country, etc. I think it might have an effect on the retailers and the banks, but not too much on the commodities.
What's your expectation? What's the market looking for? Do you think we're going to get a rate cut?
I personally believe it's not going to be a change, but then again, I believe last time around it wasn't going to be a change, and I was mistaken. There is a slight amount of expectations for a cut. I think it's maybe around about maybe 1/4 or something. Of the analysts or of the market expects a cut. The reason being is that you look at the JIBAR, it looks at a little bit below 7. Maybe that might be an indication that there is a cut coming through, but I don't think it's very likely.
And of course, we had the gold price heading back below $1,000 an ounce today. Commodity prices coming under pressure, and that really reflects on some of our biggest losers today. We have Anglo Gold down 5.3%, BHP Billiton down 3.3%. So we really do get affected when those commodity prices do fall. And of course, the rand still holding pretty firm around 750.
Yes, and the gold price is falling. I think also there's a story out that the IMF is looking to sell 1/8 of its reserves, which is something in the region of 400 tons of gold. And there was a story last week that the Chinese are going to step in and basically buy, but then they came out and said, no, we aren't going to buy at $1,000 a ton. It doesn't make sense for us. Therefore, I mean, you're going to have a huge amount of gold coming into the market over the next year or so. And if you think about world gold demand is under 4,000 tons per year, basically 10% of the world's demand is going to be issued by the IMF. So will the market be able to support that? Is there going to be the ability to basically support this much gold in the market at $1,000 an ounce? That's the question. That's what's probably driving these gold stocks down as well.
Well, what's your view on gold stocks? I mean, we've chatted to lots of analysts in the studio, and lots of them tend to steer clear of the gold sector. What do you think there?
The gold stock's negative. The gold itself, maybe that'd be a different story. However, I think people are overestimating the value of gold as an inflation hedge in terms of the global economy. If you look at China, for instance, I mean, if they had to buy the entire 4,000 tons of gold, that the 400 tons of gold that the IMF is issuing, it'll barely change their gold reserves compared to the rest of their reserves. Basically, that will account for about $13-14 billion worth of gold, whereas the actual reserves are in the trillions. So when it comes to the really big players out there, gold doesn't make much of a difference. It's maybe considered the inflation hedge for the small player, but I don't think it's going to be the gold mine people are talking about.
Of course, we have our Treasury and Reserve Bank officials heading off to India today to chat to officials over there about the MTN Bharti deal. Do you think we're starting to get some momentum there, or do you think that we could be in for another disappointment and another postponement?
It's one thing to basically have the Reserve Bank taking precautionary action. I mean, that's what you expect them to do. You're talking about billions of dollars flowing into the country. That's always going to affect the currency. That obviously has to be coordinated with the people doing it. Whether or not that actually implies that the institutions are actually going to vote for it, whether or not the premium given by Bharti is going to be effective, whether or not the current exchange rate changed from the first time they announced the deal to now, it's going to be properly compensated and even a greater share given to us. I don't know if that's going to be part of those discussions. I think basically the MTN Bharti deal is probably good in the long run. However, shareholders may not be so long-term orientated. It's just a precautionary measure, I think, in terms of basically the Reserve Bank ensuring that they aren't going to be surprised by a deal coming through.
And the markets for the rest of the week, do you expect us to continue treading water ahead of the FOMC and the G20 meeting at the end of the week?
Yeah, we also have a holiday coming through this week for us, which is obviously going to be something that's going to increase the amount of wariness in the market. I think ahead of the FOMC meeting is going to be important for our market, not just for the US. It's going to be a global thing, because it basically may give us an indication of how not just the US but the rest of the world is going to try and exit this current bout of expansionary monetary policy. And depending on what comes out there, I don't know exactly. I can't read Bernanke's mind. But if it does come out to be something significant, it could change the way the market is reacting at the moment.